Here, when we're expecting tidings of great joy for the retail season, Amazon is delivering some rather Scrooge-ish outlooks. What's behind how they're seeing retail coming in for the rest of the quarter?
Well, we think that in terms of Amazon, historically, they've usually been very cautious and sandbagged going into a forward quarter. And for a name like Amazon, obviously the fourth quarter is quite significant. In a broader sense, it looks as if the U.S. consumer is in fairly good shape with respect to the fourth quarter, with, I think, overall holiday sales thought to be up about 4%. Now, Amazon, given what they've done to strengthen their position in terms of one-day shipping and also hiring 75,000 new workers in the quarter, certainly seems to be gearing up to capture the lion's share of that gain.
What concerned you about the quarter, and why do you think shares have been able to rally intraday?
Well, I think in the vein of what we were talking about earlier, I would say, a tech for this market.
Yeah.
And from that standpoint, as we look at what the profit driver is for Amazon Web Services, some people were sort of picking the nits that you've seen decelerating growth there. But I'd make the argument that even though growth decelerated 37% to 35%, top line to $9 billion in the quarter, that still is very strong, and it also certainly confirms what we saw from Intel in terms of Intel seeing strength in data center chips.
Chris, from the chart side of things, when you see an intraday recovery like this for a massive stock, is that encouraging?
It's impressive. The price action from Amazon today, you have to give the hat tip to it. It's reminiscent of Caterpillar earlier in the week, but what I think is notable, this is the second or third time this earnings season where a big bellwether has missed, and it hasn't taken the whole sector down with it. We saw it with Boeing, we saw it with CAT, Texas Instruments, didn't hit the semis. So I like the fact that the market's been able to separate the miss in the stock from the broader industry and the broader group. I think it's a very strong sign.
So when you look at the challenges for Amazon to get these big investments in cloud and in shipping and in warehousing, to get those to pay off, what kind of challenges do they have to overcome?
I think certainly it's a matter of just seeing the execution and obviously seeing at the same time that others like a Walmart don't necessarily try to step up and work from the same playbook or do so as well as Amazon does. So I think from that standpoint, Amazon has the mantle, will continue to hold it. I would say one thing cautionary, and I think Bob Pisani touched on a very good point about how low volumes are as we're reaching up here towards record highs on the S&P 500.
Stepping back from Amazon itself, are you getting increasingly concerned about the political threat to some of these big tech companies? And which ones are most in the crosshairs?
I would argue that, amongst tech, it's a social media issue. It's the fact that these companies really don't accept the responsibilities that news organizations such as this does in terms of providing factually correct information. Obviously, we're not going to see what Mark Zuckerberg's results are until after the close next Wednesday. But clearly, I think Zuckerberg would do his company, Facebook, a real service if he were to say, we will step back from doing political advertising entirely for the 2020 election cycle, and perhaps as a result of that, serve to diminish some of the interest from a regulatory standpoint.
And David, upstairs you were talking to me just a little bit about the access to easy, cheap money right now. We've got a Fed meeting coming up next week. How are you seeing the inflows into the bond market?
Well, certainly if you look at spreads between triple Bs and double Bs, they're not widened out to a point where you would say that this is a recessionary indicator. However, I would touch on the Wall Street Journal article recently that said that rating agencies seem to have been lightening up and making it easier for subpar credits to get access. So is there a risk here at the margin that risk is being mispriced? Do you see a warning bell,
or you're not quite there?
I would say anytime that indications come up that the gatekeepers are not necessarily doing their job, people need to be concerned.